Welcome to Profiletraders. This is Reza and you're listening to my market analysis for March the 7th. We are looking first at the chart of the S&P Emini futures, and before I go more into the daily details, I want to look at the big picture to see what's going on. For that purpose, we are going to use a daily chart. And what we can see is that we had a very large push about 5 days ago, which took us to 2400, and then after that we have been seeing a retracement against this big push up towards 2400. However, if I look at the way we are coming down, there is absolutely no impulsive selling, which makes me believe this is nothing but some minor profit taking, and that the market is setting itself up for another aggressive push up, eventually retesting the high of the 2400, either marginally break it or retest it from a lower high, and then from there we could see a more significant pullback. Despite all that is happening, we have to give this market an outstanding credit for its strength and, in a certain way, its craziness. We have all this political instability, almost bordering a civil war in our political arena in the United States. Constant, non-stop attack of Donald Trump. 2, you have the crazy pygmy in North Korea firing missiles every 2 days. You have the situation in Iran heating up substantially. You have all the uncertainty over the elections and the direction that Europe could take. Despite all of this, the market does not care whatsoever. So from this point, either it is so strong that, as I said, we are going to go back up, test the high, possibly break the high. At that point we have to evaluate. Or if this continues down and we do break below, I would say the 2350 area, market could become in a serious problem or could face a serious problem. So big picture support is 2350. That is the main level of support that we do not want to see break. And if it does break, there is a lot of room to drop. Let me show you a couple of these point of controls on the downside that are target. 2362, there is one, this blue line. 2341.75, another one. 2314.75, another one. 2313, another one. 2290 and change, another one. 2278, another one. 2266, another one. And I bet you there are many more down there. This is equivalent of open gaps, meaning that at some point most of all of these blue lines will come and be tested. So market has to be really in a very optimistic mood to be able to continue from these levels, because once we're gonna give in and once the correction gonna start, as I showed you, there is a lot of room for a drop. So we're gonna put a line at 2350, which will be the absolute main line of support or you can call it the line in the sand, that once broken will change this uptrend to a possible downtrend. Until then, based on the profiles that we are seeing, we are going to use as a first level of significant resistance 2377. If we come touch that level, can break it, we should come down. If we break that level, then there is a 2386, and then after that, obviously we are going to go for a test of that 2400 all-time high. From here on, this POC at 2361.75 is support. If we do break that during the overnight or tomorrow morning, possibilities are there that we are going to drop towards 2350. So very corrective pushback, nothing really concerning so far. Overall, very strong market. But again, the danger with this type of a market is that how much do they anticipate the rosy scenario of everything, and how much market can be affected if they start to encounter hiccups or scenarios or events that they did not predict. That we do not know yet. But the pullback is corrective, and the chance of another push to the upside is still there unless we do break the 2350 area. As for oil, also the same sideways mess that I have been talking about for weeks. That market is waiting for something to happen. I don't know what it is. Is it a conflict with Iran? Is it a craziness out of the Middle East? I do not know, but this is definitely a market in a stage of pause, waiting for something to happen. Overall, it's a bullish formation because the leg prior to the consolidation is a big strong push up, and the sideways doesn't bring in any kind of an impulsive selling, and therefore it's continuing to be in a stage of a pause, waiting for something. What is it? We will see. I do not know, but that's the way it looks like. Even though that today we saw a negative close, we are still in a trading range with now the first area of significant support being 52. If tomorrow or tonight we come towards 52, that area should be a very strong support. We do break that, market will be in trouble. On the way up, due to the fact that we had a very negative close today, 53.25 is the next level of resistance. Once this is breached, we can go to 53.60, and then after that 53.90 to 54. So let's see how everything goes. Tomorrow we should see oil and oil reserve numbers, and then most importantly Friday we are going to have the unemployment numbers. And of course anything in between. In this crazy world and in this crazy environment, a lot of things that we do not predict can happen, which could impact all these markets. As always, thank you for listening, and if you wish to learn market profile, check my website profiletraders.com. You can get all my 5 courses, 1 year to my trading room for $550, and you have a 30 days money back guaranteed attached to it. Have a great trading, and to the next time.